It was yet another volatile day for the market. The markets on the Nifty at least ended slightly flattish. Mid-caps and small caps with 1% gain on those indices outperformed. Trump's tariff concerns, of course, were there, but stocks like Mahindra and Mahindra rebounded and reversed about 5% from the day's lows. FMCG was the losing sector. It's been down for 14 straight sessions. The centre is set to invite applications for electric car manufacturing scheme by April this year. Sources tell CNBC TV 18 the government has circulated draft guidelines for promotion of electric car scheme. This will pave the way for players, especially Tesla, to apply for the scheme as it hadn't participated in recent stakeholder consultations. Auto industry players see passenger vehicle sales growing only 1 to 2% in FY26, far slower than earlier expectations. However, it's reverse for FMCG companies. HUL CEO Rohit Java tells us that macros are turning favourable for consumption, especially in the rural areas, looking stronger than earlier years. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you gear up for the next trading session. I'm Prashant. I'll take you through the next 30 minutes. It has, of course, been an absolutely flattish sideways day if you were tracking the market, at least on the Nifty. But that is like the last 2-3 days. And we've been calling the last 2 days at least good trading sessions, even though the Nifty has not done very much by close. And that is because broader markets have participated and there is recovery afoot there. So the mid-cap index, 1% today after yesterday's gains. The small-cap index, about 1.5% after yesterday's 2% pop. And I think for the week, it's not looking so bad. I mean, we've not had a positive week for these indices in a while now. And it'll be nice if you're able to close this one out with some gains. But remember, there is a long way to go. This is just the first initial kind of stability that we are seeing. The good thing, of course, was that buyers seem to be back and there are bids for individual counters, which had completely evaporated. If you go back and see what happened, at least till Monday or even Tuesday this week. And it's only over the last 2 days, today included, that we've had some of this actually come back up. Nothing in terms of individual sectors. This or that was broad-based. It was very, very stock-specific. And I think that is what we have been noticing for the last few sessions. But let's just quickly, run you through, having sort of wrapped up the market, run you through what's lined up here on the program as well. Vivek will be telling us what moved in terms of individual stocks. We'll have individual sort of researchers joining us on names. CreditAccess Grameen is one. There's NHPC, Tata Power, which of course are going to be in focus as well. And we'll get you that EV story as well. Now let's go across to Vivek, who's standing by with the first one. And of course, the movers and shakers today. Vivek, what did you see?
Well, good afternoon. A trading session, like you mentioned, where the frontline indices were largely flat, but the broader end of the markets were the ones that saw majority action and advanced decline ratio very, very strong. The entire utility pack today staged a very sharp comeback. NHPC, SJVN, these are some of the stocks that saw very sharp moves. And even some of the private utilities, Tata Power, those were names too that saw buying interest emerge. NTPC Power, they rounded off what was a very good day as far as power utility stocks were concerned. The other set of stocks that did quite well were actually city gas distribution companies. Within that, look at IGL, it ended higher by over 4.5% in the session today. Capital market stocks, they saw very steep sell-off, but there's also been a very sharp recovery underway. BSE, in fact, third or fourth straight session has seen a significant recovery, today higher by another 5.5%. One stock from the broader end of the markets that did very well was actually Linde India. Nimesh spoke about it earlier, some buying interest there. Stock ended as the top gainer as far as the NSE 500 index was concerned. And APL Apollo Tubes, the top mid-cap gainer in the session today, and did very well, top gainer as far as the NSE mid-cap 100 was concerned. On the other hand, a list of negative stocks, not too many today, but the IT pack, it continued to sulk. Nifty IT index down close to just down, but look at names like Tech Mahindra, LTI Mahindra continued to see selling pressure emerge throughout the trading session. The other stock that was the top laggard today was Bajaj Finance. UBS maintains a sell rating on the stock and also expects cyclically high credit cost to actually sustain. That stock ended lower as well. CreditAccess Grameen, Goldman Sachs wrote a report today where they expect that the moral hazard as far as Karnataka is concerned, could continue. That stock off the day's low, but ended low by over 2%. And Ajanta Pharma, one of the top drags as far as the pharma index was concerned today, that particular stock down over 4.5%.
Vivek, thank you very much for that. So that's what was up and what was down in terms of individual names. Let's bring in Mayuresh Joshi of William O'Neill. We also have Ruchit Jain and Motilal Oswal Financial Services joining us on technicals. Gentlemen, good to have both of you here. Ruchit, quick view. Mid and small caps actually. Nifty, we'll see later. But are we building some base? What is it looking like?
Yeah, hi, very good afternoon, Prashant. Well, I think one pullback move was required over here because, post the recent sharp sell-off, both the mid-cap and the small-cap indices were oversold. And if you look at especially the small-cap index, then it has taken support exactly around the June 4th lows, where we had seen one panic bottom on the day of election results. So whenever such things happen that the index, the price trade near the support and the momentum readings are oversold, at least a pullback move usually comes, if not a reversal. So I think we still have some more up move before the index approaches this 20-day exponential moving average on both the small cap and the mid cap space. Although, yes, the participation is not there from the benchmark index, but the stock specific action has also been supported by good volumes in last, at least in today's trading session. So we anticipate that we would see some further up move in the mid cap index towards 52,600, 52,700 before we get any signs whether we would dip again or not. So 20 DMA is what we are watching out for initial resistance, and I think some more pullback should be seen in next 1 or 2 trading sessions.
Some more pullback in stores, so that's good to hear. Mayuresh, is that the broad view as well on markets? Some bounce here?
Seems to be the case. And again, I think a few parameters that I just mentioned in the earlier show that we are looking at in terms of the broad context on how the entire Nifty 500 is placed, how the dollar index is placed, how we are looking at the internals in terms of markets with India, in terms of the recent low of 22,725 made, the markets getting into a rally attempt, defending that low in the last 3-4 days. We are now waiting for a follow-through day, as I said. So if the Nifty makes a good move of 1.5%, as per our O'Neill methodology, I think that would indicate that at least for this cycle, the bottom might probably be in place. So yeah, I think remaining optimistic for that follow-through day to come.
All right, fair enough. Let's just get on with our list of stories and stocks that we want to cover. Now, sources tell CNBC TV 18 that the central government will invite applications for electric car manufacturing scheme by April. The government has already circulated draft guidelines for this scheme. Parishad is here with this interesting story. Parishad, over to you.
Well, this is an important development concerning Tesla and global electric vehicle manufacturers. The central government will soon invite applications under the scheme for promotion of manufacturing electric cars in India, which will give global OEMs and domestic OEMs a 15% concessional duty as opposed to 70% currently. This scheme was announced in March last year, and the government has been holding consultation with industry on the implementation guidelines. The Ministry of Heavy Industries, which is the nodal body in charge of this scheme, has now prepared draft guidelines for feedback. The guidelines will soon be notified, and sources say the government could open the scheme for applications in either late March or early April. Sources add that investment in both greenfield and brownfield projects would be eligible, but the amount of committed investment, that is $500 million, would be mandatory for both greenfield and brownfield projects. Companies can spend 5% of committed investment on charging infrastructure. The company must achieve a minimum revenue of rupees 7,500 crore by the 5th year of operation and 5,000 crore by the 4th year of operation. The applicant will be fined in case it fails to meet the revenue criteria, and the fine can be in the range of 1% to 3% of the revenue shortfall. An interministerial sanctioning committee would be formed for approving and monitoring the implementation of this scheme. Sources have told us that Tesla has not participated in any recent stakeholder consultation regarding this electric car manufacturing scheme. The government has actually received representations from almost all global and domestic OEMs, but not Tesla. However, the scheme will be opened within weeks, and the government is still hopeful that Tesla will apply, and so will other OEMs. Among the other known criteria points, the committed investment has to be rupees 4,150 crore. The scheme would apply to cars costing 35,000 US dollars or rupees 30 lakh and above. This is the cost of a shipped vehicle without the addition of duty. If approved, a car maker would get 15% duty on 8,000 cars per year, but the company must start making cars in India by 3rd year of operation in India, and achieve a domestic value addition of 25% in 3 years and 50% by 5th year of operation. According to estimates, if a company received an approval under the scheme, then a $35,000 imported car would cost an Indian customer around 36 lakh rupees, and an imported car costing $50,000 would cost an Indian customer around 52 lakh rupees. So that will be the benefit to a company as a result of this scheme.
Mayuresh, thank you very much for that. It's a story of interest with so many angles, right? Of course, from the corporate side, from a market stock perspective, but also, of course, from a consumer perspective. 36 lakhs for that car. With this considering a 15% duty, as Parikshit pointed out, if companies avail of this particular scheme. Mayuresh, any thoughts on, from a stock perspective, what this would mean, in your opinion?
No, I think it's still evolving, Prashant. So I think if this does come through, I think it does increase the competition intensity for Indian players, which were basically enjoying the entire domestic safeguards. And if that probably happens, how does this play out on volumes is something that is unknown at this juncture. Obviously, I think a lot more platforms are being expected to get introduced over the next few months and quarters as well, with many features as well, power packed into a reasonable amount of a cost structure as far as the selling price is concerned. But I think this is an evolving news, and if this probably happens, at least at the high-end level of cars, I think you will probably see competition growing up. And therefore, I think stocks like Maruti, which have got mix in terms of entry-level car, hybrid cars, they're introducing EV cars as well, with a very strong sales and service network as well, might actually be a little bit better off compared to the rest of the pack. But again, I think the overall construct, let's wait and watch on how these developments play out.
Okay, all right, got that. Well, CreditAccess is the next one that we're going to focus on. Goldman Sachs is out with a note. Stocks, of course, not been able to sustain at high levels. Has gotten to about 1100 a few times, but it's fallen back down. And Goldman is now highlighting collection efficiency in Karnataka, which is already starting to drop because of this proposed legislation. Abhishek, take us through that.
Well, Goldman Sachs has written on CreditAccess Grameen. They have a sell rating with a target price of 600 per share. They say that there is moral hazard which is starting to play out in Karnataka, and collection efficiency has dropped in the month of February. So as per industry interactions, collection efficiency is down between 87 to 95%. And just to alert our viewers, anything below 98% in terms of collection efficiency in microfinance sector is a cause of worry. So this is the post-implementation of an ordinance that banned unregulated activities in the state. That is no collections after 5 p.m. over there. CredAc is the most exposed player in the state of Karnataka. So pre-tax profit would get impacted anywhere between 15% to 27% for incremental loss rates ranging in 2 to 5% of the Karnataka MFI portfolio. Now CredAc has the highest market share over there, 19% market share in the state of Karnataka, which forms about 31% of their overall AUM. So they expect, that is Goldman Sachs expects the ROA to decline to about 2.1% in FY25 and 2.6% in FY26 versus management guidance of 2.3% to 2.4% for FY25 and about 4.2% to 4.5% in FY26. So they are anyways 34% below consensus estimate for FY26 EPS. Valuations, as per them, don't reflect the underlying pain in the book of CredAc. Back to you.
Okay, well, and that's supposed to be the best of the lot, right, in terms of quality, etc. 600 rupee price target from Goldman, as Abhishek points out. Let's just wrap up NHPC and Tata Power as well. Lots of talk about interest, at least what we heard through the course of the day in power, but power transmission, etc. mainly. But these two rallied in the back of some positive commentary from brokerages. Vivek is here with that wrap. Vivek.
Well, that's right. So the utility names today did quite well after the steep sell-off that they've seen. The first stock on the radar was NHPC. We highlighted earlier today about how CLSA had gone ahead and upgraded their rating on the stock. They earlier had an outperform rating. Now they've gone ahead and upgraded it to a high conviction outperform rating. However, they've lowered the target price marginally to account for higher capex due to cost overruns. What they're saying is that a 25% correction in the stock price has given investors an opportunity to accumulate an inexpensive, that is a 12 times FY27 price to earnings stock. It's a good utility company. And what CLSA says is that there are key catalysts. The first one is the start of the Parvati 2 hydro project. Along with that, the entry into shorter durations regulated pump projects, and along with that, significant increase as far as the regulatory utility is concerned, they also feel is a key catalyst. One thing you need to keep an eye out for as far as NHPC is concerned, remember, NHPC currently has 15% of India's total hydro capacity, but it has close to 67% share in under construction projects. So going forward, EPS growth is expected to be very strong, and which is why CLSA continues to like NHPC. The other stock on the radar was Tata Power. HSBC upgraded the stock to a hold rating from an earlier reduced stance. What they say is that they've also raised the target price to close to 345 rupees a share. They said that the recent stock price correction was largely due to factors outside of the company's control. They're saying weakness in power demand, not signing enough power purchase agreements, delayed privatization of state-owned discoms. These were some of the reasons why the stock actually fell. But they say that key triggers going forward is the ramping up of the solar module as well as the cell manufacturing facility. Remember, it's already reached 17% EBITDA margin as far as H1 is concerned. They're constructive on module plus cell margins, and they're also constructive on the fact that the EPC business has seen a turnaround. Both of these stocks did very well in the session.
All right, Vivek, thank you very much for that. Ruchit, any interest in these names mentioned by our research team, or anything else on your radar? Setups which are looking interesting, bounces which may sustain, because markets are so fast, right? 15% turnaround just like that in 2 days. So many names that I'm seeing. Anything which you think will be durable from here?
Yeah, so I think a lot of stocks which have seen a recent correction, when they are a bit oversold, they're witnessing a bounce back move. I think NBFC is one space where we expect some good positive momentum in the short term. Stocks such as Shriram Finance, technically has given a breakout from a falling trend line today, and that too supported by high volumes. And even if you look at last 1 or 2 weeks when the markets have corrected sharply, the stock has shown more of a time-wise correction or consolidation phase. So I think this looks quite promising, at least from a near-term perspective. We expect high levels towards 630 to 640 in the near term. From the same sector, I think Cholamandalam Investment is another stock where the technical structure is quite bullish. Now, these are if you look at the Nifty Financial Services Index, Nifty Financial Services is only one of the index where it has not yet breached its January low, or it is not near to its January lows as well. Whereas most of the other sectoral indices have already breached the Jain lows recently. So there has been an outperformance in last couple of weeks. So I think certain stocks such as Shriram Finance, Cholamandalam Investment from this space should do well in the near term.
Okay, all right. Thank you very much for that, Ruchit. Appreciate you joining us. Mayuresh, thank you for joining us as well, and thank you for staying on the program. Thank you indeed. What we'll do is we'll take a quick commercial break here. We'll come back and get you the top corporate voices and what they told us through the course of the day. Stay tuned. Okay, welcome back. You're with us here on Markets Forward. D Street Chatter. Nimesh is going to tell us what he's picking up from people he's spoken with regards to this sort of glimmer of hope we're seeing in broader markets. Nimesh, over to you.
Hi, Prashant. So another strong day for the broader markets to outperform. The mid-cap index gained 1%. But the big surprise index for the day today was the PSU index. The index rallied almost 2.5%. And a lot of PSU stocks saw a big move in today's market. So that's the overall market. In terms of individual stocks, the first stock on my list was Shriram Finance. A big move in that name on the back of FI buying. So there was aggressive buying is what I understand in Shriram Finance in today's market. So that's the first name. Second stock is Linda India. Even that stock saw a big move. Intraday the stock was up 10%. The volumes were on the higher side. And I understand a leading long only FI fund was an active buyer in Linda India in the last couple of days. The third stock is SGX Heavy. That stock saw a sharp recovery in today's market. There was a large block, 1.4% equity. And I understand an FI fund was a seller. And in terms of buyers, some domestic funds, including a leading AIF, was a buyer in today's block. So the disclosures will be quite interesting there. And the last is Suven Pharma. For the second day running, that stock was buzzing on the back of HNI buying. I understand some large HNI investors have turned active buyers in Suven Pharma. And interestingly, there was a Macquarie initiating report as well yesterday, and they have a big target on that stock. So that's the reason why we saw a big move in Suven Pharma for the second day running.
All right, Nimesh, thank you very much for that. So that's essentially individual stocks with news flow and what to watch out for on D Street Chatter. Well, I think let's just take you through some management commentary as well that we got through the course of the day. So Mahanagar Gas Management joined us today, and they told us that APM gas reallocation was restored back to the 51% number in January from the previous approximately 30% for CNG. The management expects 10 to 11% volume growth and a margin of between 9 and 11 rupees per SCM in the coming year, that is FY26. Also adds, importing more LNG from the US will be good for India. Costs won't be a worry due to stable pricing in global markets for the gas. Maharashtra gas stock did spike up after our interview with them earlier today. A key player in the seamless pipes and tubes industry, they saw a 6% jump in today's trade. The company aims to secure significant orders in March of 2025 for this year. The company has set a seamless tube volume of guidance of 4.3 lakh tons with an expected EBITDA per ton of about 16,500 rupees. Management adds, promoters have been actively purchasing shares from the open market. They plan to increase their holding from the current 68% to 75%. And lastly, Zaggle Prepaid stocks corrected quite a bit. They've tied up with Reddington to provide low-cost tech solutions for enterprises. The management told us that the partnership with Google through Reddington aims to offer savings of over 10% for employees. The target segment for this deal is large enterprises where the company enjoys healthy margins. They also said that it's still too early to provide a concrete figure in terms of the revenue upside from this deal. Okay, well, that's corporate commentary. It's a wrap of this edition of Markets Forward. Stay tuned. We'll be back after a quick commercial break. News and updates follow on the other side.
Hello and welcome to Business 360. I'm Shireen Ban, and here are the top stories that we're tracking for you this evening. The Indian equity markets get stuck in a tight range after opening week in line with other Asian markets. Global cues remain tepid as uncertainty over America's tariff policies and its impact on global rate action holds sway. Mid-caps and small-cap indices buck the trend today.